Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with that price action and what I think is likely to happen next. As I get into today's video, if you do find it useful, informative, smash that like button. We really do appreciate that here. Spreads the content to more like-minded individuals. And if you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications and you will not miss another video update. Joining us in Discord though is the place to be. Check it out. Link is in the description below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. Let's waste no more time. Let's roll that intro and get right down into the video. Okay guys, let's start things off with that 1 hour time frame. So here we have a Bitcoin paired up with USDT. We're using Binance as our data source here. So as you can kind of see, we're still stuck in our range from, well, the last little while. We basically kind of reached this upper area up here on the 9th of November, right? And we reached this upper area and we kind of have been pushing down towards the lows and then back up to the highs. We've seen a lot of liquidity grabbing going on, right? So we had the initial highs, we then had an initial surge to the downside to liquidate any longs. We then pushed up to liquidate any shorts. We then pushed back down to liquidate the longs, back up to liquidate the shorts, back down to liquidate the longs, back up to liquidate the shorts, back down to liquidate the longs, the way back up again to liquidate the short positions. So basically we've been just doing a lot of liquidity grabbing. That's essentially what's been going on here with Bitcoin. It's not been fun if you're not really appreciating what a ranging market is. And so what we're doing here is we're kind of observing this structure. We still have our target range being up here at the kind of $38,000 to $40,000 level. We haven't broken down to prevent that. We haven't broken up to complete it. Okay, and that's kind of what we're waiting for. We're either waiting for a break above 39,980 to kind of get us into that next bullish movement towards our $40,000 target. Once achieved, we can then talk about bigger, larger short positions, or we're waiting for a breakdown so that we can actually complete out a wave 4 situation by retesting those existing lows, that being this yellow box area right here. Okay, and within this area what we're talking about is we're basically saying we want to see price revisiting 34,700 to 35,300, somewhere in that range. That is actually going to be what we're looking for, right? A breakdown to this area. Now a double test of this area I think will then basically still keep us in our range, unless of course we can wick down lower than the low which we have down here at 34,800. We must stay above 34,120 to stay in our structure. Anything lower than 34,120 is a breakdown of the structure and the pattern, meaning that it is no longer viable to see that $38,000 to $40,000 level under this current structure that we find ourselves in. Smart money concepts does find itself in both bearish and bullish patterns as we are in this ranging market. That hasn't changed over the last 24 hours. We did see a move down here most recently on this 1 hour time frame, completing out a 3-wave pattern. Nothing unusual here. We've rallied up a little bit, but we are about to probably pull back down again and probably retesting some of these EMAs. The 50 EMA being the red line is going to be an interesting one. The 50 SMA, that is the yellow line, was the support on the previous Y wave. So is that going to be the next area of support? We did find that we haven't yet tested the 200 EMA, that is the white line. This was previous resistance here, so coming back down and retesting that as support could be interesting. It could be that we're actually in a bigger 3-wave pattern, with this being the W wave, this being your X wave, come back down, retesting the Y, basically finding support on that 200 EMA before we continue this move to the upside. Ultimately, it's it's kind of all to play for here. It's a little bit of a difficult one to kind of see what we think is likely to go on when it comes to the hourly chart. It's just clouded. Ultimately, on the larger scale of things, on the daily, we have a pretty clear idea. We are looking for this move to the upside. For the $38,000 to $40,000 level, right? That's kind of something that we're looking for. We obviously have as well some clear target ranges, right? If we see a breakdown lower than 34,120, then that's going to break our structure. So if we were to go long on the market, we could of course look at market entry here. We'll put our stop loss at that kind of 34,120. Which will be somewhere around about here. And then, of course, your take profit is going to be at that kind of $39,000 to $40,000 level. And you can see that this just doesn't give us the risk-reward ratio that we would want. It would not be a good trade. At least not good in my opinion. If we had entered it down here and got lucky, then yeah, we would actually have a pretty decent position here with a 2.79 on the risk reward ratio. So like for me, I think it's not really kind of open to trading just yet. If we do revisit these lows, then we could potentially put in the cheeky long position. And of course, if I am to trade, I'm going to be trading with BitGet. All the affiliate links are in the description below. So do check those out if you haven't yet got accounts on there. I think you'll be pleasantly surprised by what you find down there. So do check them out. There's many different exchanges. BitGet is my go-to platform at the moment, but I really do like 𝗗𝗘𝗪𝗔𝗥𝗘, just to name a couple as well. So do check them out below. So yeah, for the most part, our daily kind of charts are on track. But ultimately, I think the most value actually is going to come from a big short position up here, right? So we can put our stop loss, let's say at 40, probably going to put it at like 43,000, something like that. And then I'm going to take my take profit right the way down here. And it's going to be a pretty sizable move, in my opinion. So we're going to see a pretty decent correction. We have the fair value gap indicated down here at 30,000. So that's going to be the kind of target range. Going to be like basically putting our stop loss at 43,000, hitting kind of an entry level around 38 to 40,000, and then take profit down at 30. That's going to be where I think the maximum amount of value is going to be found in the Bitcoin chart right now. But, that's going to take probably weeks to months to play out. So it's one of those. I do think, though, once we complete this structure, our next move is to $30,000, and it's going to be a pretty sizable move nonetheless. What gets us there? I don't know. There's so many different things that are going on in the real world that can basically do that. Everything from, BlackRock's ETF getting delayed or rejected. That would be a pretty big catalyst. All the way through to, something happening with all the various different wars around the world. So many different things. CPI data, you name it, there's going to be something that's potentially going to fuel that. I think a move to $30,000 isn't too bad either. Percentage-wise, from, let's say, up there, I'm talking about 23%. That's been pretty common for corrections so far. If we take a look at what's been going on, you can see here a 21% move most recently from July through to the lows of around the 11th of September. So all in all, that's not looking too bad. So yeah, I think for the most part on Bitcoin's price action here, yeah, that's kind of where we're looking. We're looking for this kind of move to the downside. We're looking for a bit of a $30,000 level, but only once we kind of complete that fifth wave movement. If we do break down, then we break down and we're going to be losing the structure. Then yeah, we'll be heading down there anyway. But for value in terms of trading, I think yeah, a short position from those higher ranges is what I would be doing, and I would be using BitGet as my go-to platform for that. All the affiliate links are in the description below. Moving over to the weekly time frame, we can see the ascending wedge. So we do know that this is bearish. We're overbought on the stochastic RSI. In fact, if you take a look at these stochastic RSIs, we're overbought on the monthly, overbought on the weekly, overbought on the hourly and 4 hourly at the moment. So it's not looking overly great on the short or long term at the moment. We can see here that this breakdown has some pretty bearish patterns potential. As I was kind of talking about yesterday in the walk and talk video, there is this big bearish pattern in play, right, where we can see a big kind of three-wave pattern coming down towards that kind of $12,000 level. That was kind of what 𝗗𝗘𝗪𝗀 was suggesting, $12,000. But actually, this particular pattern has the ability to come down lower than $10,000. So we want to be really open to all structures here, whether they are bearish or whether they are bullish. Right now, we have an overlapping structure in an ascending wedge, which is bearish on our weekly, indicating that we are likely to see downward price pressure. Personally, I'm hoping that 20 to $21,000 is where we find the support, and we don't go down any lower than that. If we do lose that areas, we are talking about revisiting the existing bear market lows, and that could be pretty disastrous for many retail investors. So it's going to be an interesting one to see how this one plays out overall. But ultimately, I think, we are up in the upper areas of resistance. We can find ourselves in this ascending wedge. I think that $40,000 is going to be that upper limit for where things are going. Again, if we were to short this, looking at the weekly chart, we might have a slightly different perspective on stop loss. We'd probably want that to be around $48,000. And of course, would have our take profit potentially down at that 20,000, in which case you're still going to get a really good risk reward ratio. I think it's going to be something that we have to adjust a little bit as well as we kind of get into this. Trailing stops and stuff like that could be really, really beneficial for trading Bitcoin in the next kind of big pullback to the downside on BTC. But guys, I think that's going to wrap up today's video. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.